How you can see, the stock market has been super weak in the last time. And if you like to short, probably this is a good time. But for me, I usually go long. It could be actually sometimes better because when the market is strong, I have so many signals, so many entry that I sometimes I rush it. I don't choose a good one. So when the market is weak, you can find what is strong. And for this one, I use the relative strength. I'm not talking here about RSI, the relative strength index. No. I'm talking about relative strength. That is going to give me an indication of how strong is one stock compared to the overall market. Okay, so let me give you some example. And again, when the market is bad, I'm going to have few entries, but sometimes they are really good because they don't care about the market, and sometimes they trade in the opposite way. But because I have so little, I can concentrate on those, check all these parameters. How you see my chart today is kind of easy. This is not what I use for my daily trades. It's more to check some indicators for my algo trading. But I want to show you a bunch of stuff today. And in these cases, when the market is weak, I just want to play something that is gonna work. So I want to maximize my chances here. Okay. So in this case, the market has been going down, and I noticed, for example, that gold. If I go to the future on gold, relative strength of gold has been increasing really strong compared to the overall market. And then in the future index, I received this entry here. This in this case is a squeeze. I don't trade the index, right? So what I decided was to go to some individual stocks that I traded. The same time that I was receiving the entry in the future, I was receiving the entry here, for example, in this stock. And how you can see, the relative strength is high. The stock was picking momentum. It was closing on the MACD and starting getting on volume. And because it was trading high all this time, and I have this first bounce on the moving average, the second bounce was really close here. I decided to take the trade. So I traded this one. I traded this one too. And in this one, I paint something that I like, that is a pitchfork. And then I see that how these bounce, they happen on the lower line of the pitchfork. And at the same time, it's happening on my EMAs. And it's holding in the second one. So I saw exactly what I needed. I saw volume coming to the stock here. You see? This is relative volume. I want to paint something that is out of the normal. MACD was closing too, and the stock was taking momentum. The relative strength is high, and also the implied volatility is it's a little high, but it's not out of the normal, not out of the range. So in those two stocks, I do the trade, and I was selling. I started selling here, and I closed my position today here. Or actually, I still have one position for this one, 1/3 of my position in this one only. At the same time, this other stock for gold was doing the same thing. In this case, an ETF. I didn't trade it because it doesn't have any option, but I just wanted to show you the same thing. So the key here is that it doesn't matter if the overall market is going down. You want to find the sector, or even better, the industry that is defying the overall market, that probably is trading higher because there is some situation. Maybe you can talk about inflation or all this fear of recession. I don't know. I don't care. I only see that I have many entries in one industry, and I see that perfectly aligned for me to take the trade. So that's what I did, right? So I took the trade, and then I went back. For some of them, I don't even know what is the ticket about. But again, it doesn't have to be always in one industry, because for example, I can show you this one. Halo is a therapeutics, nothing related with gold, I believe. But again, the squeeze here was bigger. It was taking longer. So I took my trade in this moment when MACD was about to cross to the positive. Momentum was picking up in the uptrend direction. And then, yeah, I decided to take the trade. I saw some part here, and I'm still in that trade. I can show you also this one. I didn't trade it. I didn't see it. I saw it today actually. But it's an example, no? It's just if you start looking for the stocks that are trending up, probably receive a notification for this a squeeze happening here. So, but the point is the same thing. You see that squeeze, the stock is trending, all the EMAs are stuck positive. You see volume coming to the stock. Probably I didn't trade it because it was earning season for them. Momentum started shifting to the positive side. Relative strength was huge. And something that I don't like too much is that implied volatility already was high at this moment. Okay, so because I trade options, probably I will be paying premium. And so far, I show you the squeeze trade. You can read a little bit about the squeeze, or I can show you another video later what I mean with a squeeze and what is exactly what I'm looking for. But there are like examples. You don't have to trade only squeezes. You can trade also, because I'm trading this one, I'm still on it. This is more like a trend, uptrend, and I look at this one differently. I'm looking more for volume on the low points, volume on the breakout. People is buying in a pullback. I want to see this pullback going up. And for example, and for this one, I use something that okay, so for this one, I have this indicator that I created. Let me put in the chart. That is gonna be painting more like a high and lows, and sometimes it's choppy. You see all these high and lows at the same level. That's not what you want, right? So you can paint this channel line that it's not even touching the low points, because it's just a symbolic way for me to spot the trend. Now, more importantly, is that I see that the stock is creating higher highs and, more important, higher lows. Okay, so when I see this one, actually I traded here. For me, it's a good indication that it's an uptrend that probably is gonna continue. We don't know. We just know the past, but you can get some information that is gonna help you identify the trend. So again, you have higher lows, higher highs. You see the volume in the key points when it's important. The relative strength is super high. All the EMAs, they are stacked on the positive side. The MACD is almost all the time in the green side. But then I kept this one because this is little chart that you see here is a Renko chart. And what you see here is a representation of 3 years of data. I don't use the Renko to time my entries, but it's a good chart to define clear congestion zones. For me, I want to identify where are the areas where the stock was more traded, because for me that's gonna be a good support. Not the low, not the high, no. The direction was defined. In this case, you see in the Renko chart that it started going up to this level and traded here for a while, then pulled back, came back, traded here for a while, came back. You can use this to plot maybe double bottoms. This is not double bottom in theory, but you see that at least a channel. You can plot that the stock was trading from here to here or to here, right? See, those are the congestion areas. And then when I see this breakout above the congestion area, when it's at all-time highs, well, I'm ready. Just the only thing that I have to do, once I see it here, the only thing that I have to do is wait for an entry. I take my trade, I sell a little bit, I buy more, maybe I sell here in the future, and I trade it. I trade that trend, right? Yeah, it's very simple. It doesn't have to be complicated at all. If you don't know how to use this relative strength, again, no RSI. Something that is very simple is just to show this comparison, and you can plot this line chart for the stock market. In this case, S&P 500. And you see how this stock is going up. It doesn't care about the overall market. The stock is gonna trade high. And you can do the same thing for the other ones. You see? The squeeze is what's happening when the S&P 500 started going down. For gold, actually was it consolidated for a little bit here. I guess the market was trying to figure out what was happening. And then gold continued moving up at the same time that the market, overall market, was going down. Very simple, very, very simple. So I want to trade stocks that are strong, that they don't care, they are independent, and they don't care about the market. That's what I want to. And for that reason, I said at the beginning that sometimes when the market is bad, it's easier for me to spot the gems because it's gonna be 3 or 4 plays, and usually they're gonna be strong. When the market is good, I have hundreds of charts, and because I have limited amount of money, I need to try to identify the best one, and I never do it, almost never do it. But in here, it was super simple. That's it. If you like the video, yeah, like it, I guess.